Prospector News is media for educational purposes only and should not be construed as advice. We are not a certified financial analyst, licensed broker, or fund dealer, exempt market dealer, or hold a license to provide financial advice. We provide no legal opinion regarding accounting, tax, or law issues. Nothing in this podcast should be construed as investment advice or the solicitation to buy or sell stocks or commodities. All opinions expressed are those of the participants and should not be relied upon when making investment decisions. Those decisions should be made with the advice of a personal financial advisor. If you have enjoyed our podcast, please hit the like and share buttons and be sure to hit subscribe. I'm Michael Fox, and this is the Prospector News Podcast. Joining me today, I have Kai Hoffman, CEO of Soar Financial and the host of the Oreninc Index that we run on our website regularly that promotes the private placements in our sector. Welcome, Kai.
Mike, great being on again. How are you?
Absolutely wonderful. It's been a nice summer, lots of good weather. Been really quiet though. How's the financing market? Has it been quiet as everything else?
What do you call it? How's the weather? Well, it's rainy with a chance of meatballs, right? No, it's not very pretty out there right now. Some of it is summer doldrums. Some of it is just market apathy. Like people don't care too much right now. Some of it is, or lots of it has to do with what the Fed is up to these days, raising interest rates, saying they'll go to 3% or they'll keep raising rates, maybe at a slower pace. So investors are not willing to spend the money right now to go into stocks, maybe in the main markets right now, but definitely not in the high risk juniors, in the gold, silver, copper space. They're really hesitant to deploy cash. We do see a few bigger deals done, but overall, you can say it's quite bleak on the financing side.
Yeah, I've been noticing the index has been bouncing all over the place. I think there was only one deal that week, and that's the lowest I've seen the index in the 10 years it's been going.
Yeah, it was 8 points, 8.87 points. I think it was one deal or eight deals, actually. Number of financings were 8, but overall there was a bigger deal missing. It was just nothing. It was just bleak. There's nothing going on that week. That's why I think it was the lowest. Even I think the Easter week of 2019 or 2020 was better. And that was the slowest we had, was with 19 points. So 8.87 is by far the lowest we've had 2 weeks ago. And yeah, it's just replicates everything I just mentioned before. Just no interest. The US, North America is on break. Europe is now on break as well. Nobody's around to buy the financings.
Now, is this going to present a challenge to the junior miners going forward, or are they already kind of sort of cashed up when things were a little bit better last year and into the spring period at times, so that they've got money in the bank, they can explore and wait for better times?
It's a challenge and an opportunity because of the lack of capital for some of the smaller companies or some of the companies that haven't been able to raise capital in recent months. It'll be a challenge because they won't be able to raise right now, or without or at least favorable terms. They'll have to dilute more, so it's not pleasant for many. Many of them will only raise what they really need. So we do see a lot of smaller financings. Nobody's going out to raise the big bucks right now to drill big. So we see a lot of $2-3 million financings at best, because they say, hey, well, if we can get some work done, we can cover our G&A. Let's wait. Let's see if we can wait this out. I'm not sure if that's the right move, to be quite honest. In hindsight, we'll all be smarter about that. But the companies that do have cash right now that can run the bigger programs, they're definitely benefiting, because now the drill crews are becoming available again. Because now all of a sudden, some of the companies are slowing down drilling. One company, I saw a press release, they're going down from 7 rigs to 2 rigs. All of a sudden, there's 5 drill crews available in an area. I think it was in Quebec. It was around Val d'Or. And all of a sudden, there's 5 really highly skilled drill crews available. So it's also a big opportunity for many of the other juniors out there that do have the cash and maybe had some foresight raising early.
Yeah, it's always when there's bad for one, there's opportunity for another. It's just a matter of picking out and figure out who the winners are going to be in that type of scenario.
Absolutely. So as an investor, I think that's the job we have to do now. and to really try to separate the wheat from the chaff. And that's it's fun.
Well, yeah, it is. I always found it more interesting to be a stock picker rather than the tide was raising all the stocks, and my paper boy could pick a stock and still be a winner.
Exactly. Kind of boring.
Yeah, well, boring, but yet in a good way.
No, it's true. Might as well buy an ETF, right? You can just buy the GDX, GDXJ, and just go on with life. Don't have to worry about it. But in a market like this, it is definitely a stock picker market. You do have to choose your battles very wisely and carefully, and maybe wait it out a little bit as well. There's no need to rush into the market at this point.
Yeah, no, we're definitely, if you're taking any positions in the junior sector right now, you better be looking at a long-term horizon for your gains. Now, the markets have been, well, beyond dismal for the juniors, but I've noticed in the last couple of weeks, and again, this might be a seasonality type of scenario, because usually around the end of July, August, early August, you see the bottoming out of the seasonality. But I've noticed that the decline is kind of slowed down, and there's even been an uptick on a few of the stocks. Does that bode well for a return of maybe some semblance of normal back into our financings in the fall?
I don't see it just yet. Give it a couple more weeks, but it also has a lot to do. I mentioned the Fed earlier. The markets don't know where they're headed right now. I don't think the Fed knows where they're headed personally, based on the commentary I'm seeing. GDP dropped today, for the second quarter. It was announced today with a 0.9% lower GDP, and people don't want to use the word recession. Powell definitely thinks we're not in a recession because maybe one or two sectors are still performing, but it looks like the economies worldwide are retracting, and that doesn't bode well for anything. Gold still a safe haven, but even in a recession, gold has been tough. It can rally in a recession as well. We've seen that before, but for the stocks, it doesn't bode very well, and we have to be cautious unless the Fed changes course. And I've been hearing analysts say, well, at 3%, they might hit the pause button on the rate hikes to see what is happening with the markets and how the economy is developing. But until we have some clarity, I think there's going to be a lot of investor, like you call them, it's like abstainment from the sector, from the markets.
Yeah, I'm of the belief that the Fed is going to continue to raise rates until the jobs numbers start to decline. At the same time, technically we are in recession, and we now have had 2 negative quarters. That's the technical definition. Although my favorite definition of a recession is the Fed's definition. It's not a recession until we say it's a recession. But it's, we're definitely there, but we're there without the job losses as of yet. So I think until we see job losses, I think the Fed's going to continue to push those rates even higher, until, as we often say, until something breaks.
Absolutely. I just interviewed Dominic Frisby out of the UK, really a well-known writer in the UK. And well, we were discussing the scenario of a 10% interest rate scenario, like we saw back in the 70s, like a really high scenario, and what the fallout might be. I don't think people's imagination sometimes goes far enough to even think of the catastrophe that would sort of come with it. Just thinking of the mortgage market and mortgage rates for personal or private home buyers, higher interest rates like that will just crush them and completely destroy markets and families, economies, completely. So I don't think the Fed has an interest in that either. We'll see where their journey goes, but the same way I'm sort of flip-flopping here as well, and not really certain of what is happening. I think the same way the market is acting, and that's why there's very little deployment of capital.
Yeah, I wouldn't disagree with that. The economy can't sustain an interest rate climb to those levels. I think we start to run into problems at about the 3.5% to 4% level, and we're not even there yet. But when Walmart starts to say, people are slowing their spending, pay attention.
Exactly.
So now, recession is typically bad for the mining people. But we're in a bit of a different scenario right now where long term, because there hasn't been really a whole lot of new mines coming on side, reserves have been eaten up over the course of the years, and we're starting to get into deficits in certain, commodities, nickel, copper, etc., with the potential with the green economy, an increased demand in spite of recessionary pressures. I know it's cliche, everyone says this time is different, and it never is, but could this time be different?
Good question. No, you look at the fundamentals, and we're a bit of an echo chamber here as well, right? We're in mining. We want all the mining stocks to do well. We want all the exploration companies to be successful. But in reality, that's not the case. Only very few projects survive and make it through to actually production. And yes, we look at all the supply and demand fundamentals, but it feels like whoever I talk to, doesn't matter what metal it is, there's always a gap, always a supply gap. Especially copper is like, I think that's a given. But it feels like that gap is not being filled quickly enough, but also supply isn't or the demand, sorry, isn't as picking up as quickly as everybody thinks. Everybody's using the same statistics, not real world sort of events. When you look at the chip crisis, all of a sudden, why would you need more copper if you don't have chips to build cars and batteries? So I think that's all connected, and there might be a delay in that supply and demand gap hitting. So we'll have to take a closer look at it. Of course, we want more funding in the sector, more M&A. But look at the gold miners, for example. If you look at Newmont and Barrick, they're having their reserve prices still at $1,250, and once they start repricing those, I'm starting to get worried, or not worried, but I'm excited. Sorry, I'm starting to get excited about M&A in the sector again, and we don't see that yet. They're still ultra conservative, but something big might happen any day, and we wouldn't expect it. Nice black swan, I think.
Yeah, no, that's true. M&A comes, out of the blue sometimes. But I like what you said about the, we are in a vacuum. We do want to see everybody succeed, but it is a very small. I'm a baseball fan, and I often liken the mining industry to batters, and we have a worse batting average than a National League pitcher has. So it's that's pretty bleak.
Yeah, absolutely. And it is tough. Like, and as we discussed, coming back to the junior explorers and junior miners, like if you don't have cash right now, raising money right now is definitely not fun. And if you're a stock picker, you obviously go with the companies that do have cash, so they can work and start continuing developments of their projects.
Oh, it's like everything. Cash is king.
Absolutely.
Going forward, then we're going to look towards the next round, I guess, with the Fed to see what happens, if they're going to start to blink or if they're going to continue full steam ahead. Then, eh?
Absolutely. Really curious to see now with the GDP number down again. They might take the foot off the gas a little bit, and we'll see if they really stop in September. It's now 2 months. They don't meet in August. They're off in August, so it'll be really interesting to see what happens in the next 8 weeks. Next September, like the next FOMC meeting is September 20th and 21st. We'll have to see what happens in between. Quite honestly, what does inflation tell us? Where are we in 8 weeks? And then we probably have a better indication of what the Fed will do. But my gut says we're going to stop at 3% for now and see what is happening, unless inflation drops quite significantly.
Well, I think there will be an inflation drop in the next inflation report. The last inflation report didn't reflect lower energy costs that had started to accrue through June and July. If I just look at gasoline prices, we went from, in Prince Edward Island, where I am, we went from $2.13 a liter, and now we're at $1.85. So it takes a little bit of the inflationary sting out of the economy, and energy does go across the board with everything. But I also think that given the situation with Russia and Europe, I also expect that as we start to head back into fall and winter, and the the temperatures start dropping, I think we're going to see those inflation numbers start to move up again. So if we get a respite at all in September, I think it may be short-lived.
Yeah, no, absolutely. So we'll have to see. I think that's what the market will do. It's a wait and see approach unless we get any more signals that tell us to the contrary. But I'm happy to wait and see right now, and
Wonderful.
just sit on the sidelines.
Wonderful. I look forward to us doing this on a regular basis. Let's meet together again in August after you've crunched down the July numbers for our section, and we'll take it from there.
Fantastic, Mike. Thanks for having me on. Always a pleasure, and of course, I'm looking forward to August already.
You bet.